As of lately, the REITs have been on fire, and most of them saw a pretty nice increase in ticket price. So it's fair to say that the momentum is within the REITs right now, especially with everything that's going on with the rates. I've selected a list of 7 REITs that I'm closely watching and are potential buys for me. And they all do have one thing in common. They pay a juicy dividend. And what better way to kick things off with the monthly dividend paying king of them all, Realty Income. It has been an interesting ride this year, but down the line, this stock is up only 2.5% year to date. Realty Income is a 52 billion market cap company with a price to FFO of about 14.9, indicating they could be still undervalued based on this number. Revenue has been increasing really steady over the years, and in the recent years it really took off, also due to different acquisitions. To me this looks pretty good. I always prefer a steady and consistent pace, especially with REITs. One thing that I do not like about Realty Income is the fact that all the margins are dropping, and it is not something that feels like a fluke. This has been going on for more than a decade. And now back to the good stuff, the dividends. Of course, Realty Income is known for their monthly dividends. The dividend yield is at a juicy 5.3% and payout ratio is at the 75% average for REITs. The 5-year growth rate is a little shy at 3.5%, but with a high yield like this, I don't mind that much. Especially since they have been increasing the dividends for more than 26 years in a row, which is really impressive for a REIT and shows that they have a proven track record. As of right now, Realty Income is one of the bigger REITs in my portfolio, and I keep adding more shares every year. They are rock solid and capable of still growing at a high pace. Next on the list we have Camden Property Trust, ticker symbol CPT. And this REIT has seen a pretty good run with almost 20% year to date, outperforming the S&P 500. Camden Property is a 13 billion market cap company that focuses on multi-family apartments in the United States. Price to FFO is at 17 as of recording this video, indicating they are around their fair valuation. But hear me out on this one. Revenue has been increasing at a really steady and consistent pace, which is really important for me when it comes to selecting REITs. Margins are looking pretty interesting with a decent growth in gross margins, but both the operating margin and net margin have been somewhat of a roller coaster. And now the good part. CPT pays a juicy 3.4% dividend yield with payout ratio sitting at only 60%, which is way below the 75% average for REITs. So there's some room to grow the dividends here. They have been increasing the dividends for 2 years in a row now, which is kinda deluding since they pay a supplemental dividend once in 2016. So technically they have a way better track record here. And as of right now, CPT is on my watch list, and soon I will do a deep dive analysis to learn more about this company. For now, things look pretty interesting with this one. And if you want to learn more about REITs or just stocks in general, make sure to check out this playlist with hundreds of individual stocks that I analyze especially for you. Now we come to one of my favorite REITs, VICI Properties, ticker symbol VICI, known for owning properties on the famous Vegas Strip. Year to date, the stock has been struggling with a minus 3%, but that is actually a good thing in my opinion, since it gives us the opportunity to buy more shares at a cheaper price. VICI is a 33 billion market cap company, and price to FFO is sitting at only 12.4, indicating VICI is undervalued as of right now. Revenue is increasing really steady over the years, but most recently it seems growth is slowing down just a little bit, but nothing that worries me a lot here. Margins are going up and down a little bit, which tend to happen more often with REITs, but still, I prefer a bit more steady pattern here. And VICI pays a juicy dividend of 5.25%. And payout ratio is looking really good at only 65%, way below the 75% average for REITs. And the 5-year growth rate also looks really good at almost 8%, which is not too bad for a REIT, and also considering the yield is already pretty high. They have increased the dividends for 5 years in a row now, and I think it's important to know that VICI is only been around here for 5 years, so actually this is pretty impressive. Eastgroup Properties is the next REIT on this list, and this one might be a little less known. This REIT focuses on industrial properties in the Sunbelt markets throughout the United States. The stock is nearly flat year to date and in ticker price, which is kinda interesting, but they had a decent run up ever since late of April. Eastgroup Properties is a 8.75 billion market cap company, and you pay a premium for the stock since the price to FFO is at 22. But again, hear me out on this one. The revenue has been increasing really steady and consistent, and for a REIT this looks really impressive. And please take a look at these margins. They are capable of increasing their gross margin, operating margin, and even their net margin at a really steady and consistent pace. This is why we pay a premium for the stock. You get a quality business in return. Looking at their dividend yield, we see that it is actually a bit on the lower side for a REIT at 2.8%. But their payout ratio is coming in at only 62%, so there is some room to grow here. And because this company is performing really steady and consistent, the 5-year growth rate is sitting at 12%, which is pretty impressive. They also increased their dividends for 3 years in a row. For me, this is all I'm looking in for a REIT. Having a nice niche focus, a steady business, and great dividends. You pay a premium for the stock, but there's a reason for that. Eastgroup is currently on my watchlist and I can't wait for a small pullback so I can start my first position. Another interesting REIT is Essentials Properties Realty, ticker symbol EPRT. This company focuses on single-tenant properties net leased to middle-market companies. Year to date, the stock has increased 14%, almost matching the S&P 500. So that's pretty impressive already. EPRT is a 5.3 billion market cap company with a price to FFO coming in at 16, indicating they are trading around their fair valuation. Looking at the revenue, we see that this number has been increasing really steady and consistent over the years. Exactly what I'm looking for in a REIT. And more impressive are the margins. EPRT is capable of growing the gross margin, operating margin, and net margin. And for a REIT, this is again really impressive. Looking at the dividend stats, we see that EPRT pays a 3.9% dividend yield at only a 61% payout ratio, meaning there's plenty of room to grow this dividend. And they have been doing that at almost 6% in the past 5 years. And they have 5 consecutive years of dividend increases. Down the line, this is just a really good quality REIT in my opinion. They are performing really steady and consistent and pay a juicy dividend. This next REIT has caught my attention a really long time ago, but I was never in the position to buy a position due to different reasons. And I'm talking about Mid-America Apartments Communities, ticker symbol MAA. This REIT focuses on multi-family homes in the Sunbelt region in the US. Year to date, the stock has increased almost 13%, slightly underperforming the S&P 500, but it is looking pretty good in my opinion. Market cap is a little under 18 billion and price to FFO is reported at 16.6, indicating they are trading around their fair valuation. Revenue is increasing at a really steady and consistent pace over the years, which is really impressive for a REIT. Margins are a bit of a roller coaster, but over a longer period of time they are going up, which is the good part here. And to be honest, especially the net margin is up significantly. Dividends are also looking really impressive at 3.8%. dividend yield and payout ratio at only 66%. Also, with this company, there's plenty of room to grow the dividends. The 5-year growth rate is coming in at almost 9%, which is also really impressive, especially since they have been increasing the dividends for 14 years in a row now. To me, MMA is a great and high quality REIT. I wish there was a small pullback on this stock so that we have a bit more of a margin of safety. For now, it's on my watch list because at some point I do want to own this REIT. Last on the list we have yet another monthly dividend paying company, Stag Industrial, ticker symbol STAG. This REIT focuses on industrial properties as the name already suggests. This stock has trading sideways year to date, which is kinda interesting. It has a nice bull run recently. Stag Industrial is a 7.2 billion market cap company, and price to FFO is sitting at 16.2, indicating they are trading around their fair valuation. The thing that I really like about this REIT is that they are able to grow really steady and consistent in revenue over the years. Next to that, in the long run, margins are increasing really steady and consistent as well. Although most recently the net margin is slowing down and decreasing a little bit. The dividend scorecard is a really interesting one, with dividend yield coming in at 3.75%, which is a great number. Payout ratio also looks pretty good at only 62%, plenty of room to grow here. The 5-year growth rate is really low, which is one of the things that is holding back a lot of people. But they have been increasing the dividend for over 11 years in a row, which is really nice. For now, I keep adding more shares throughout the year. It's one of my smaller positions and I'm planning to add more shares anytime soon. And with that being said, we are getting to an end of this video. If you're interested in not only which REITs I'm currently watching, but also which other stocks I'm buying, make sure to watch the other playlists and videos with hundreds of videos on my channel. In general, I think that REITs are a great way of adding more dividends to your portfolio. It could really boost your average dividend yield with that cash coming in. You can buy other stocks or reinvest in those REITs again. As of right now, REITs are about 20% of my portfolio, and I'm trying to keep it that way. Which REITs are you currently buying? Let me know in the comments down below. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.